The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome, folks. We get Tom O'Brien and Tom O'Brien growling and prowling with you out here. We appreciate you being out here with us, folks. And if you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You're going to see the banner on the top or the side. You can hit that banner, bring up the account. They'll put $25,000 of paper money into your account. You can see how these contracts trade. And you've heard the promotion many times. Bottom line is that it's a defined risk type of situation. Your trade can be a stop, depending what you're using. Great system. The volatility is out there in spades. And we're going to get to the gold market first.
That's what I heard. That's what you said. What's been going on this morning?
I tell you, man. So picture this. We know gold gets smoked for long periods of time.
I was waiting for you for a long time. Yeah,
long time, right? What has happened is that each and every time, in the last 3 weeks, 2.5 weeks, every time they get it down, they can't keep it down. Yeah. Now, we don't have any buyers, but we don't have any more sellers. Okay. And if I've learned anything in the marketplace, it's this, is that sellers line up. You have orders that are under the marketplace, right? And people say, okay, I do the same thing myself. It says, okay, man, I'll put my stop down here. Do you know what I mean? Okay. And so what ends up happening is that
when you're saying people that are long.
People that are long,
right? Stops are below the market.
The stops are below the marketplace. And, sometimes you say that, okay, I know they're going to come after the stops and say, $2. Or I'll put a $4, okay?
Yeah. You're always, I know, which level, right?
What is it? Where,
$2 are going to come after 2, so you go to 4. But then what if it's like that game of, what level are you at? Did you out-level yourself? Did you go, right? Because it's like, if they're going to put it at 4, I'll go to 6.
And you take yourself too deep.
That's what, right.
Exactly,
right.
Okay? So what the market is the best at is to take the most amount of money away from the most amount of people in the least amount of time.
Yeah.
There's no doubt.
I like that saying. Yeah,
And so what happens is that those big operators, when they come in, that would be you and me, that'll be someone running a bunch of money, right? They, fundamentally what they do is say, okay, I want to see if there's any more stops on there, because if there's no more sellers, we're at a price now that it costs gold to come out of the ground.
Right.
Okay?
No, all of those companies,
right.
I mean, that's a real number.
It's a real number.
What's gold worth? Well, if you can't get it out of the ground under the value, that's a real number.
That's a real number. So it doesn't mean
that's a fundamental, very fundamental take, though.
No, it doesn't mean it can't go a lot lower, no doubt. It might, even a fundamental take, it can't stay a lot lower, because gold's not going to go away, okay?
Otherwise, nothing's going to get produced. So it'll eventually, there's no production, demand will then take the market.
That's right.
You'll need to increase the price because production will have to come up.
Exactly. And if and bottom line, jewelry is the biggest seller inside gold. So that's going to be on. Yeah. Well, bottom line is that this morning when the jobs number come out,
I wasn't even looking at gold.
That's right. As the jobs number come out, bang, they take it down. They take it down good, right? So I'm sitting there looking at them, saying to myself, "Oh, this is nice."
Yep. That's the 830 bar we're looking at. Exactly.
That's the 830 bar.
Right.
So what happens, folks, is this: is that if you trade futures, right? Futures are great to trade. I love trading futures, and I still trade futures. But I love trading gold and Nadex because this is what happens, right? I'll show you what my defined risk was this morning, and it was wild. So the defined risk, the contracts that I bought it at 84. Okay, I think the low was 82. I bought it at 84, and I'll show you what I did.
Yeah.
And what I did, my defined risk was only to 75.
Right.
So for a gold, that's huge, man.
Yeah.
And my upside, my upside on this is 1125, folks. Okay.
Yeah.
So this
is you were right in the right area of this spread that I like to be in, and this is kind of what we talked about before, where this spread that you're in. It looks like 1075 to 1125. So it's a 50-point spread.
Yeah.
And the middle of that spread would be at exactly 1100, where you're getting 1-to-1 risk reward.
Right.
And you're on the much lower side. So you're getting in at 1084.
Right.
Give or take. Now it looks like you can see here your average price was 1084.7.
Yeah.
So you were probably paying a little bit of a premium, but exactly like you said, you were probably risking 10 to make 40.
I know it was the premium was small.
Right. I mean, it looks right. You can see that. Now let's see. You can even see. So 854. Let's see where we're at. Yeah. So it was probably you were probably paying a point premium. You can see this is the 855 bar. You're in. It's at 1083.8 to 1082, and you got in at 1084. Those are the ones exactly that I've gone over that I really like. Now, where I wouldn't want to be in is where it's at like 1104. Yeah. Because you're doing the opposite, and that's what we've talked about, where it really just oscillates on that point, and if you can get it where you got it, especially your risk reward, you're paying a small premium, but I like those risk rewards on these types of spreads.
It was crazy.
Yeah.
I mean,
that's a nice trade, man.
It was really, and what happened, folks, is that two different things ended up happening. I mean, I've been watching that level for a long period of time, and most of the listeners know gold is comfortable at 1104 for some reason. It hasn't, and today it went to 1096, but this 1104 area, there's something about it that it likes going up to, and I think it's building cars to get through that area. So what was so intriguing though is that the upside on this is huge, man.
Yeah.
I mean, it doesn't mean I'll get the full upside, but it was a sweet upside. It was for a spread versus a binary. It was almost a 1 to 5.
Right. Yeah. You're risking 10 to make 40 of a 50-point spread.
Right.
Those are nice when you're on the bottom end.
Right. Right.
And that is where we talk about this with Darryl, where they have so many options. And so how you can trade if you want to go long gold. What spread are you going to be in? How long is it going to be? Looks like you found a good one to capitalize on. Yeah. That type of risk reward.
Right.
I like those.
I get it. Yeah. No. What I found, and I'm not sure if it's like all the time like this, whether it's in gold or oil. I guess what you hear enough of me is that gold or oil actually gets more volatile, and you have to put up so much money in the futures market that I don't want to lose like 2,000 or 3,000 in a second. You know what I'm saying? Yeah. That's kind of what you're hearing. Yeah. Where what happens, folks, is I can put up. In this case, I put up. I think my maximum risk was 283, and I can make like 1,200.
That's what. So I mean, your average price was 1084.70, which means you were paying $97 per contract.
Right.
So yeah, you have 3 of them, so somewhere around just under $300.
And I can make 12.
Which are already up right now, right? Because they moved 10, so every point you're making $30 or losing per. Right.
And you can't do that in the futures market.
No, I know. Yeah.
Well, you can make the money, but you can't put up that least amount of money that I can't.
It's a completely different risk reward. It's the risk reward, and that's where that's what you're kind of talking about, and that's where it makes these really advantageous, I think, if you're playing the market correctly.
Yeah, no doubt. And folks, if we take a look at the, let's go over to the Nasdaq for a second, because what you're gonna want to keep your eyes wrapped around, for the next few weeks, is the Nasdaq got hit hard yesterday. Now the Dow hardly got hit at all, but the bottom line, the Nasdaq got hit hard. What that has to do with, that's the IBB. This IBB, when the IBB falls apart, man, it takes things south, and it takes things south really quickly, man.
That was a big day.
It was it was amazing, man. And I suspect that that's only the beginning of it, okay? Because it's been a rocket ship. There's no two ways about it.
I was looking at your chart that you just did for your market update for the IBB, and it's literally like a straight line with that. Even yesterday is barely noticeable almost. It's such a big uptrend.
That's right. On a
longer term chart, but it's like yesterday literally is almost like nothing, which is like, man, that's been quite a ride. Yeah,
it is. And when you're looking, we have this is the Nasdaq up there right now, and
that's yesterday, of course.
Yeah. And by the way, that yesterday. That was a perfect. What was really wild is that it seems that when markets come down, right, for some reason the Fibonacci ratios seem to work more consistently.
Say it when the market what?
When the market comes down. When the market gets out of control, right? Okay. For some reason, these numbers just really hit really fast. When I was on the air yesterday, I was looking for it to go into that number. Now, that wasn't a fib number. What it was is it was a breakdown of the last 4 days of trading. I was like, okay, 4502 is the number.
Okay.
And it's like, oh my God.
That was an expansion of some sort, 4502?
Right.
Okay.
And I didn't expect it, though, to go like in 1 day. Okay. But it's just intriguing. And so when you're even trading, basically some of these binaries or the spreads, that's when, you can kind of look at it and say, okay, how far do you think they can go?
So there's that too, but I mean, just literally looking at channel lines, nothing to do with Fibonacci.
Totally.
These two right here.
That's right. And now we're building cause.
Coming off right here. I mean, I was looking even this morning.
That goes all the way back to July 15th too, right?
And this is just a 5-minute chart, but just going back. Yeah.
That's pretty cool.
Yeah.
And what you have there, folks, is that the, excuse me, this building cause over the weekend is going to, I suspect, get
I know.
Get some things going. Well,
plow right through it on Monday morning.
Larry brought up a great point.
I was waiting. I mean, I love listening to his show, just looking for those where he's like, this level you can see support, this level you can see the bounce. And, he's saying, if it goes through it, well, that's why you have your stops. If it doesn't, that's why you have your stops. But you look for those points to be the turnaround or to be where it might go to, and then you're taking your profits.
You do.
Yeah.
And he was bringing up the aspect that Disney gave up 20% in one day.
Yeah.
That's insane.
Yeah.
I mean, that doesn't really,
No,
it makes sense to me because I'm a bear, okay? But it really doesn't make sense in the context that when I actually really think about it, okay? Meaning that, okay, if I was a long-term investor, Disney's a great stock, we know it's a great stock, has been a great stock, and all of a sudden I lost 20% in one day. It'd be like having a house and I lost 20% in one day. It's like, what? What just happened?
Yeah.
That's and I think his point was that, hey, you got to watch out for the market right now.
It's a wild market, especially Disney. I mean, they're in that sector of trying to, monetize their own content and how that will play out, and they get all the money from ESPN and the cable packages. They're really up in the air, and we've had this discussion. They could go a lot higher too, but nobody can establish what that's worth right now.
I know, because of ESPN, right?
Yeah,
right. Tom O'Brien, you stay right there, folks. We'll come right back. Our phone number is 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 86767523. The prospectus or summary prospectus should be read carefully before investing. In the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 80, Nasdaq off 24, S&Ps are off 9.5, gold's up 520. Bonds, the bond market, man, you get the 10-year up 6 ticks, the 30 up 1 point and 4 ticks. So bonds, right? So check this out. You know, the whole world is thinking that the Fed's been telling us they're going to go up on rates, right? So normally the way that bonds work is that when the Fed has come down on rates, you know, you see that the 2-year, the 10-year, the 30-year come down, okay?
Yes.
On the way back up, what everyone is expecting is that if the rate that the Fed is going up on is the Fed funds rate, which doesn't affect you and me.
It's the bank-to-bank rate.
It's bank-to-bank rate.
It's the rate banks get.
It's
for
the
their
bank,
overnight.
that's right, for the overnight. So as I'm looking at, you know, the bonds, I'm saying to myself, this is amazing, man, because the bonds are not moving like the Fed wants them to move right now. They're moving the opposite way, actually, okay? So the rates are coming down.
Sure.
Then I really start thinking about it. I says, you know what? I says, why does the 10-year and the 30-year have to move up just because the Fed fund rate? And inside this conversation, I'm just thinking, I'm saying to myself, you know what? It doesn't have to.
Doesn't have to.
No.
They're definitely correlated. I mean, you have the Fed funds rate is the beginning of the chain.
Of the beginning of the cycle.
That's like, you know, if you ask, you know, why do Walmart prices have to change to a consumer if their cost of goods changes?
That's right.
That's just, so
it is.
Banks pay for money. They don't right now, actually. You know, it's like 0%.
Right.
But if they start having to pay for money,
right,
inevitably those costs have to, not overnight, but
no, they do.
They're going to be there.
No, check
they
this out.
have to come from somewhere.
I agree.
Yeah.
I agree. Now this goes into the mix, right? So right now you get peer-to-peer lending sites.
Yep.
You have banks. You have hedge funds. There's so many more people in the lending business now, right?
Sure.
I'm trying to say, you know, I think it's just going to be intriguing watching how this shakes out. You know, if in fact that the Fed does go up, right, in September, and the thing doesn't move.
Yeah, no, and you know the other side, in support of what you're saying, is that everybody's really used to really, really low interest rates, and and you can't just raise them and expect people to keep borrowing money. I think that would be a shock too. So there's going to be that pressure for even when the banks are going to have to pay for a Fed funds rate, maybe to keep them very low, especially mortgage. I mean, nobody's going to refinance forever if banks go up. Everybody's locked into such a phenomenal 30-year, and then people going into a house, you're going to feel like maybe you should wait.
Right.
I mean, that's if I was going to refinance, you know, so there's going to be that tendency to say, well, you know, I'm not going to pay 6%. That's insane. Do you know what that's going to do to my payment? I'll just maybe wait. Or,
I agree, man. I mean, inside the fund, that's why I try to move as many houses out as I could the last 4 or 5 months, and there's no doubt.
I'm happy I'm in a 30-year right now, and I have it, and I'd like to refinance at some point. But yeah, if I was nervous in buying a home right now, I would, you know, it's
make
a
a
huge difference from 4.5 to 6% or 4 to 5.
Right.
Yeah.
Definitely makes a difference.
Yeah.
You know. Now, the dollar. So the dollar, 98.22.
It's put up over here.
And what you have, folks, is this dollar. So this is another divergence in the marketplace right now. If they're going up in the rate, the bottom line, the dollar should be going to the moon, right? And the dollar can't handle a swing point that's been hanging out there for quite a while. So it's like today's going to be a big day because it makes no sense that gold's going up. The jobs number come out, great jobs number. The dollar can't handle higher price, and bonds are up. I like that divergence.
There's a lot of volatility.
It's whacked out.
It's the same thing like we were saying with Disney. Nobody really knows the monetization of that and where they sit and what's going to happen. It's kind of the same thing here where nobody knows, just like we're having the conversation of nobody knows. I mean, usually it's simple where, like you're saying, those relationships exist.
Right.
But it doesn't necessarily mean that rates are just going to jump up to 6% and the 2-10-year are just going to go right and right. So,
hey, you know what I want to talk about? This is off. This is off of productivity in gross national product, right? So, jobs are up, right? The big mantra, though, is that the gross domestic product is still only running at 2%, and people wanted at 3%, right?
Yep.
So I was thinking, right? Social media, right? Okay. Now you're a millennium, right? Millennial. Thank you. When I look at the aspect of how many folks are on here, we're going to talk about this when we come back because this is, I think this has to do with gross domestic product.
Okay.
And with the yin and the yang of it. Tom O'Brien, you stay right there, folks. We're coming right back. Dow's down 88, Nasdaq's off 30, S&Ps are off 11. It's getting smoked. Gold's up 520, and the dollar index is up 319. We're going to be right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. TFNN.com now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien. Appreciate you growling and prowling with us out here. And we get the Dow down 76, Nasdaq's off 25, S&Ps are off 9.5. We got gold up 630. Bonds continue to higher price. Dollar just can't handle it. The dollar's up 232. We're at 98.14 right now. It's like, okay, why is the dollar giving it up? Who knows? It's really wild, though. It really is. If we go back to the Nadex platform, folks, and if you haven't test drove the Nadex platform, come over to our website at TFNN. You hit the banner. You can bring up the account that put $25,000 of paper money into your account, and you'll see how these different contracts trade. Something that is important once you start trading them is understanding that, let's say you trade the NASDAQ, which I trade a lot. If you have a contract in the morning and you get a big day like you had yesterday, right? What you want to do is, what my son Tom actually showed me, and one day we were out here trading, when you were trading them, is like, hold it. In the middle of the day, you had already got the most out of that contract, and it was closing that contract. Right. And then, in our case, we both opened. I think you opened another one. I opened another one, right? Because that's crucial to understand.
It's keeping your risk reward where you want it to be, right? And it's taken. I mean, we've talked about it. And Daryl's saying taking 80% of those profits, and especially in the spreads.
Right.
If you get in risking 10, like your gold one, for instance, this morning, you get in risking 10 to make 40.
Right.
Well, if you've already made 25 points of those potential 40, then you're now in a trade where you're risking potentially 35 to make 15. You're risking 40 to make the 10. So you get out of that trade, and then you're rolling it over to a different spread, recalibrating that risk reward, and now, especially if it's early enough where you think there's still that potential move.
That's right.
Because that's where, you're going to pay a small premium for that risk reward.
Yes.
But you're still looking for that, where you've maxed out the potential.
And you took your other money off the table.
Right.
So what happens, folks, is that there's different time frames inside these contracts. So what you're doing is that you take the money off the table on the time frame that you have, because you basically just about maxed out on that.
Right.
And then you open the new one if that's what you want.
Right.
And it's dramatic.
Yeah.
And the new ones that I had opened that day, it was only a 10.1, but I closed an 80. It was like, that was crazy.
Right.
Yeah.
Yeah. Instead of, keeping on the table your initial capital investment plus your profits.
Right.
You can take it off, and maybe then you're just risking your profits on the next trade.
Right.
Which is
so
nice
if we look at this gold one, let's look at this gold one for a second, because what I like about the gold one in general too is it's only to 130.
Yeah. Right.
Yep. So it's when the pit is actually opened, folks. Okay. Yeah. That's how this
works.
You've
got 3 hours left.
Right.
You're getting close to the middle of the spread. You're still in a nice spread in that you still have a greater than 1-to-1 risk reward.
Right.
Which is nice.
Which is fine.
Yeah.
Exactly.
When it starts to get on the other side of that 1100, then I would definitely, you could look to maybe getting out and just getting, because that's when you'll be risking more than you can potentially get a reward.
Exactly.
And
it's unusual that you get a spike this fast, this high. I mean, I wasn't
pretty good
looking,
morning.
with,
Yeah.
you know, well, when I get into it, yeah, I was saying, hey,
more than doubled what you put into it.
Exactly,
Right.
this could happen.
Right.
But I was really looking at, okay, how much can I lose? And I said, well, I can make $4 or $5. That's what I was looking for. I wasn't looking
Sure,
for 10.
right,
I mean,
sure,
that was kind of the reality. Do you know what I mean? So like when it gets up here, I'm saying to myself, okay, you know, I suspect what I'm going to, at 11:04, depending on how it hits that 11:04, that's going to be, but you know what happens?
Not if it hits it, how it hits it.
Yeah, exactly.
Not if, how. It's got to get there first.
It does have to get there first, no doubt. Hey, we got a few hours here.
No, there's plenty of
Yeah.
time. It's only 10:30.
Yeah.
I mean, there could be, especially with, I mean, that's a lot of strength
Oh.
coming off, and all that is the jobs number. So that could just be a quick knee-jerk reaction that has no basis really for where supply and demand are, obviously where it settles with that action following.
Exactly. And what does happen is that the aspect is that, okay, you know, who shot, who, you know, it really is who shot in the market and wants to go over the weekend.
Right.
That's you know, that's
So
a basis.
just to pull up for each contract right now,
Yeah.
it's basically trading at market. You can
Look at
see
the
it's
difference,
95.5, and right now the market's at 95.48.
Right.
So you know it's trading 0.1 above, but yeah, you're still in risking 200 to make 300 of the 500-point spread. So that's where I talk about once you know. So if this, to use your 1104 number,
Right.
if this gets, so you can see it's about 4 points below the middle of the spread of
Okay.
1100.
Yeah.
So if it gets to 1104 or 1105, it's going to be the exact opposite, 5 points above the middle. And so that is where you would then be risking 300 to make 200. So
Right.
that's where those 5-point swings around the middle of these.
Yep.
And this is where I talked about you got that at a really nice point in the spread where it was on the lower end.
Right.
And this would still, if you were initiating a new trade for the day,
Yeah.
you know, if it didn't already have this maybe, or if you
Right, it didn't have the move.
this is where I like it in the spread because you're almost paying no premium
Right.
at all
Right.
to get into a 3-2 risk reward.
Yes.
And
right.
so that's where I think on previous shows you had gotten into one that was very close for a 2 to 3, where
Yeah.
you're risking, or you're risking 3 to make the 2.
Right.
And it's like for you're risking that because you just collected about 40 cents in premium. Where I
Right.
know that doesn't value anything almost to where you're playing it. So it's really, and that's where the demo account, watching as these oscillate right around the spread. Where
Yeah,
they're
that's
on the spread.
important, man.
And the best way to do it, just like I did it right now. What's
Yeah.
the risk reward? Well, I put in, I'm going to buy one, and it tells you exactly. Your max loss, 205. Your max profit, 295.
Right.
Very simple, defined, everything. So that's where as you start to, now let's just say, let's say it goes up to 1105.
Okay.
Right there. That's to a T. Okay?
Oh, that's pretty cool that you can put that right in there. Oh, that's even
yeah.
better. That's nice.
sure.
Yeah.
So that's where, if these do make it up to 1105,
Right.
the value of your investment at that point would be risking 300 to make 200. Now, keeping in mind that you've already doubled what you had put in, risking about 100 to make 400.
I know. I take some of that off.
Yeah.
I would.
You-
I mean, because
You could take half it off
Yeah.
and almost lock in a
Right.
double on your profits with it.
right. Exactly.
Yeah.
Exactly.
So,
'Cause-
it's creeping up. So right now, just to keep track of it, even here, still, max loss 226 to make 275.
Yeah.
I like that as this is creeping up. You still have a greater risk reward in your corner. In the long run, in volatile markets, that's going to really help you out a lot with keeping those risk rewards in your play. A
Yes.
lot of people might not, you're thinking you're trading it, especially if you're keeping it for a period of time. Not even the whole day, but if you're willing to ride some swings,
Right.
you better have risk reward in your way because more often than not, you're going to take it to the extreme of your max loss or your max profit when you're dealing with the spread that's only 25 Nasdaq points or 25 gold points.
Yes. No doubt.
Recently.
No doubt. Yeah. Right.
Yeah.
Right. Yeah. Wow.
That's the best part I can tell people with the demo, to really just see how the premium effects. This is
Yeah.
trading. We're inching towards the middle of this spread. So that's what's kind of cool to see, that it's literally going to be trading dollar for dollar in terms of where you're getting the bid and the offer.
Yeah.
But at the same time, you're getting it exactly at market with a greater risk reward.
I know.
That's a pretty sweet deal. Now, I say exactly market, it's not exactly at market, and that's why you're getting that risk reward. You're going to pay that 0.2
Right.
points in gold. You're going to pay, so it's determining your strategy
Yeah.
and saying, is there enough volatility that
Right.
paying 20 cents per contract
Okay.
of premium
Yeah.
to have a 3-2, yeah, that's worth it. Because that 20 cents in premium is worth having that risk reward in your corner. Now, sometimes, like we've had slow Fridays,
Right.
where you say that's not worth it because there's just going to be no movement. So I'm going to be the one paying the premium. There's going to be no movement, and at the end of the day, whoever I just paid that to is just going to collect it. And so that's when you look at the other side.
That's why volatility is a best friend. Trade is a best friend. You know, when I say this, folks,
understanding it is.
Okay,
I mean,
that's good. No, that's more important.
So many people make so much money off no volatility.
That's more important.
And they're trading to the people who think there might be volatility.
Okay, cool. So yeah. Okay, yeah.
If there's no volatility and you know that, you can make a killing.
Yeah.
Because you're just the one soaking up all the premium.
It's the premium.
Of the people that,
Interesting. Right.
I mean, that's kind of what Darryl was talking about with the trades he was talking about. Yeah, last week. He had that great example of taking the premium on each side.
Right.
And, you know, maybe on a Friday in the market, this might have been a good day to do it too with so much market movement yesterday.
Yeah, no, I suspect it would have been.
I mean, the Nasdaq is moving around. It is. Yeah. But that's, you know, that's.
But even though, you know, last time that he was on with us, it was moving around, but it
as long as
closed right where he wanted it to close.
It doesn't matter what. I mean, and right now this could be the same. I mean, you'd probably be looking somewhere around 45.10.
Yep.
45.15.
Right.
You'd want to be split in the middle.
Right.
And trying for the market to settle. You know, your max profit, you'd be looking for it to settle somewhere in here.
Right.
And that's. I mean, look at this. It's like. You could play it both ways.
The spread is big enough,
right? You could try and look for the bottom and the top and be buying and selling the spreads and short-term trading.
Right.
Or you could set up a trade like he had, where you're just looking for it to jump up and down.
Unreal. Yeah, no doubt. No doubt. That's pretty cool, man.
So let's see what gold. Yeah. Let's see how it shapes up. So would you ride this to 130, or would you, if it got to that 1105, take some of the profits at least?
I would.
You have 3 contracts.
I'd take 2.
You could take 2 of them off.
I'd take 2. Why not?
You'd guarantee yourself a profit.
Yeah.
You'd make $100 and you'd have a contract on.
Right.
With about $200 in profit locked into that contract. With a potential $300 to. Yeah,
right. Yeah. And because of what you have. That move from 82 to 1104, that'd be a good move. And I suspect, you know.
That's a pretty good move.
Exactly.
In 2 hours, gold, after going down $10, you literally buy it, turns on a dime, and goes up 20. That's a pretty decent move.
And because it's been building cause down here, so that totally makes sense for me, too, that next week we come into the marketplace and then it goes. Because what the difference here in this movement is that in 2008, right, when everything went down, gold was high, the markets were high, markets went down, took gold with it. Yeah. Went from 1036 to 666 in a heartbeat as the markets went down. What I'm digging about this market right here is that the market's going down, gold's already got killed. Gold's going the opposite way. Now, that's the first time that has happened in almost 12 years.
Yeah, I mean, you can see the chart. Maybe it's just settling at these levels, right? And that's,
And
I mean, this is going back a good 3 months. It's just been hanging out. That's all it is a $20 oscillation. You go back at least 2 full months.
Right.
Really? Not 2, but 6 weeks. You know, you're sitting there.
And so it's possible.
4 weeks, whatever.
And folks, that's
it's a long period when you see that it just jumped $20 in an hour and a half.
Right. And that's how gold used to trade in the 80s, in the beginning of the 90s, right? Yeah. It was still in a bear market, okay? But what would happen is that when things were rough, money would go in gold quickly. Do you know what I mean? Like, oh, this is, you know.
No matter what, it's going to be.
No matter what.
There,
And, you know, that hasn't happened.
Yeah.
The word safe shouldn't be used in the marketplace anyway, but it's not. But that's they claim they're running the safety. Okay, well.
Yeah, no, that's not the same, right?
No,
people don't think that anymore.
No,
they don't.
Not even close.
You see our headlines all the time about gold's tanking, gold 800 possible, as the market's tanking.
Well, you know what I liked yesterday, and you know this guy, the CEO of Rango Resources, Mark. He was on Bloomberg yesterday saying that he could see gold going to 800. I said, oh, that's good. You know, and the reason I'm saying that's good, folks, is that when I start doing these gold shows, when gold was at 300, right, all these CEOs, they thought I was out of my mind saying that we're in a bull market. They're looking at me like, you know how long we've been in this market we've been in a bear market for 20 years? You know,
they have to manage those companies.
They do.
That, so their job depends on being able to manage that, whether gold goes down $100 in the next 6 months or not.
Big time.
Yeah.
Big time. There's no doubt. You know what I mean? So
it's almost like that perspective is locked in for them. It is.
It is. No,
I'm sure they're optimistic.
It absolutely is.
Yeah.
You know,
survival.
But that's good.
No, I hear you. Right.
And then the contrarian type of sense that maybe
it's time.
Yeah.
If everybody's so worried. That can appreciate
that. And we know what hasn't happened is that we know how much cash is floating around the world. but people are still holding on to it.
Yeah.
It's not going through the velocity of the marketplace.
Yeah.
You know, and that is the only thing that basically, you know, gets inflation going.
Yeah. So finish, when we were coming into the break, you started talking about social media and
Oh, yeah.
GDP.
Okay, so this is what I was thinking, right? That the gross domestic product, right, hasn't gone where people think it's going to go, right?
They want it to be.
They start thinking. I says, you know what? It's because everyone's on their phones, right? So when I look at everyone on their phones, I'm saying to myself, man, I said, no productivity is getting done, right? Now that's one side of it, but then the other side of it is I'm looking at myself on my phone. I said, well, I got a nerve even thinking that because I mean, between the construction and the market, I'm trading on this. I'm looking. I'm saying to myself, well, I'm getting production on here.
Yeah.
You know, and so it's like. So the question is do you think that's affecting, you know, the gross product? Is it a good or a bad?
Yeah, I don't know how you think it's bad. I don't.
Yeah.
I mean, everything's productivity. Anytime you're on Facebook, they're getting dollars for ads.
Right.
You know, just going straight to their bottom line, which is hiring people, which is, you know, and so it stretches in many different. It's very simple. You're replying to emails, of course, that's productive. But productivity, even when you're downloading gaming apps, maybe you're paying for those gaming apps. Maybe you're adding something on into your app for an add-on.
See, this is where it's the new economy, man.
And
this is why Facebook's taking over.
Right. I mean,
Google's
the debate
taking
last
over.
night was a Facebook shared presidential debate. That's, people are on their phones playing on Facebook. Well, guess what? Now they're watching
I
the
thought
debate.
it was a cartoon show. If that didn't look like a cartoon show, nothing did. I thought it was 7 o'clock in the morning, and I was, 7 years old again, getting ready for the Three Stooges to come on.
Well, there's going to be lots of cartoons on for the next.
I know, man. I know. Unreal. Tom O'Brien, you stay right there, folks. We're going to be coming right back. Dow Industrials right now down 55. We get the Nasdaq off 18. S&Ps are off 6.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tom O'Brien, appreciate you growling and prowling with us out here. Right now, you get that out on 72. Nasdaq's off 22. S&Ps are off 9. We have gold up 780. Bonds continue higher. And just amazing, folks. The dollar actually gave it up. The dollar's in a negative position right now, down $1.26 at 97.78.
It's all over the place. It is.
It is. It's at that swing point. Someone is sitting at that swing point, selling away at the dollar. They're just hammering the dollar at that particular point. You know, when we're talking the gold market, so as we come up to the middle of the spread, if I wanted to put an order in now to say that, okay, listen, I think gold's going to this 1104. I like that 1104. I want to get a couple of dollars back. You know, and in particular, sometimes you get spikes in the marketplace, right?
Sure.
So,
yeah, no, this is what we're talking about. So you're saying maybe we can put it in the order. Now, it is, you know, worth noting and going over is that you can be the bid and the offer here. So we'll you know, put in your trade. Now, these market makers have bid and offer sizes of 40. You know, if we wanted to sell 2 of the contracts you have out of the 3, you'll see you'll see the offer pop up there with 2. Now, what I started to say that's important to note, so you said, okay, if it goes up to 1104, you know, maybe we should put an order in and we'll have it ready.
Right.
Now, that's perfect, but what's important to understand is that if gold goes to 1104, the spread isn't going to be exactly trading at 1104 as that premium starts to get built in on the other side of that. So if, you know, as gold goes above the spread, it's going to trade pretty close to parity right as it's going. But as it gets up to 1104, the spread might be trading at 1103.8.
Right, just the opposite.
Okay, so that's where, so it would be a shame if you ever had gold hit 1104 and you had your order in at 1104. But as long as there's time left in the day, there's going to be a small amount of premium built into that because of the risk reward. So what I was saying was maybe you want to put it in it, you know, 1103.50.
Right. Okay.
And so that's what you could do, you know, in the same way. And just to, as it gets up there, you know, that would be, now you're selling it, so that's, you're locking in, you know, the 570 essentially.
So let's put that in.
Okay.
So
1103.50. Close it out.
Okay.
So we have our 3 contracts. We have 2 of them up there. And there's our 2.
And there I am there. Interesting. Okay, right.
So it's a tight market, you know. And once it, it'll be interesting to see. And, you know, it made a little push, pulled back a little bit. But that's the kind of stuff that you really want to get used to, because that will drive you crazy if you ever predict correct market action and your strategy doesn't let you do what you thought it would do.
No, definitely.
And that's the toughest part. Is that, you know, a lot of times people can figure out the strategy. They know the market direction they maybe expect. They know what they're looking for. The most frustrating thing is you get what you're looking for and you didn't position yourself correctly.
Right.
And that's where.
Right. And that's something that I'll keep an eye on anyway, because that could change still.
And this is a simple example where it's at 1104. There's going to be a very small amount of premium, but to take that to an extreme, let's say you thought at 1120.
Right.
Okay. And you say, all right, gold's going to pop to 1120. Well, if gold pops to 1120, like right now, let's say in the next 10 minutes, this spread isn't going to move to maybe 1115, 1112.
There's so much time left,
there's so much time. There's going to be a huge amount of premium left. So it's understanding how those premiums interact. We say it all the time, but it really is. And that's what I played with the most when I downloaded the demo.
Yeah.
Yeah.
Because that is the most
I was
important.
in the binaries to begin with, like we talk about.
Right.
Those are so exciting, exhilarating, the profit potential, risk reward. But understanding the spreads and looking how the premium trades.
It's huge.
Yeah, it's a learning experience. It is.
Yeah, there's no doubt.
Yeah.
And the way you do it, folks, just come to our website. You'll see Nadex. You can bring it up, $25,000 in your account. You stay right there, man. Mr. Basil Chapman's coming up next. Nico's going to be coming up. Steve Rhodes, Dave White. We'll be back this afternoon. Thanks, Tom.
Thanks,
Great
man.
show.
Great
have
weekend.
a great one, folks. Yeah, have a great weekend, man. It's Friday.
It
it's
is.
a TGIF, baby. All right. Thanks, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.